look at reinvesting back in your business because there's such a good return there versus sometimes diluting yourself, because the idea of, concentration builds wealth and diversification keeps it is very, very true.
Hello, everybody. Welcome back to Commercial Real Estate Secrets. I'm your host, Austin Hare. Our guest is Isaiah Douglas. He's the partner of Vincere Wealth. That's Vincere with a V. It's a financial planning firm. It focuses on helping dentists and veterinarians get to the point where work is optional for them. And Isaiah's been in the business since 2015, and Vincere was started in 2018. So thanks for coming on the show, Isaiah.
Yeah, appreciate it. Thanks for having me.
Yeah, cool. So, we were talking a lot off camera, and I'm excited to get into all the different topics that we're going to go through, M2, inflation, Bitcoin, the Fed, everything like that. But before we get to all that, I want to learn about you a little bit. How did you decide to become a financial planner? Did you always have an interest in finance? I mean, Warren Buffett, for instance, in middle school, was starting businesses and hoarding cash and counting, pennies and stuff like that. What was early childhood life like for you?
Yeah, so I grew up in rural Indiana on a hog farm, so the farthest thing from thinking about finance a lot, but definitely grew up. I think my parents did the best they could, but definitely didn't come from a lot from that standpoint. Had a lot of brothers and sisters, and I think money was kind of a struggle. And so one of the things when I was early on in my childhood, and you kind of realize that stuff, that I thought to myself, I didn't want to necessarily have to have those same struggles when I got older. So I was interested in learning about money. And I think initially it's always the investing thing, right? You use Warren Buffett, you're like, oh, I'm just going to be this amazing investor. I'm going to go out and I'm going to start this thing, and you get super wealthy. And a lot of people think, from a financial planning standpoint or financial planner, that's what they do day in and day out, which, it took me a while to learn that, but that's a small part of what we do. It's really interesting. There's a lot of benefit to the investing side, but so much of that is different. But yeah, my childhood and kind of the interest there was I wanted to not go through some of the hardships that I think I saw, and just be able to put myself and my future family in a better position. So that was really kind of what childhood looked like. And then, yeah, I think I've always just been interested in the question, and I ask this question a lot, what is money, and trying to understand how that impacts incentive structure, decision making, and all these different things.
Yeah, it's exactly like our podcast that we have in common, What is Money, with Robert Breedlove,
Yeah.
which I've been getting into lately. So it's interesting you've been having that same question for a long time now.
Yep. And I think even a lot of advisors, peers, people that I respect, if you ask that question, you're going to get a very different answer from anyone. I think it's a great question for anyone to ask. If you are interviewing or just chatting with someone, just ask them that question and see what the answer is, because sometimes they're like, well, duh, we know what money is. And then it's like, well, shoot, what is it? Right? Let's unpack that a little bit.
Yeah. I mean, so we should get more into this. I kind of want to hear more about your story, but just high level, what did you find out? Did you find out anything early on? How could you explain it to somebody right now who's listening and they think, I know what money is, or I don't know what money is? How would you explain it to them?
I view money as the idea, right, that you're going to take your energy and your output of something today, and you're going to store it into something for future consumption. That's really what money is. So if you're going to spend time and energy away from your family, and you get paid for that, and then you come back and you're going to, do whatever. At some point, maybe you want to take a vacation or buy a house or get a car or any of those things. So that's delaying and deferring that consumption. But money needs to then hold that value across that time. And so I look at it a lot of times as a battery. Think about money as a battery. And that's just saying, hey, all the time, energy, blood, sweat, and tears maybe that you put into your profession or your education or all these things, now you're getting paid for that. When you get paid, that's just storing all that energy that you've already expended into the future. And I know that's coming a little bit from a Michael Saylor, for those that are maybe a little bit into the Bitcoin area and think about just Bitcoin in general. He describes, I think that kind of energy and battery definition, and it really clicked for me. But I think the other thing that money does, and to think about money, is it allows for people to specialize, to say, I'm really good at this thing. I might not have an interest over here. So, hey, I'm a really talented doctor. I'm really good at taking care of, a root canal, or I'm really talented and I can run this business really well, but shoot, I don't know anything about building a house. I don't know anything about, HVAC units. I'm going to go hire that out. And it's great because I have money and we agree on the value of that. And so,
yeah, I think it's good.
That's kind of the way that I would think about it.
Go ahead. Okay. Yeah, I think what you're saying is like it's it's kind of like an exchange of time almost. Like money is like it's a way to you obviously have to put your time in for the most part. Like you can make exceptions and do investments to get an ROI, which is a return on your money, not really return on your time. But for the most part, like money is time. Like it's a way to store time. It's a way to save time. Because if you have a lot of money, you should be able to buy things that would normally or pay for things that would normally take time. And it's like you're usually almost always investing your time to get money, and then using that money to free up your time. Right? Like maybe not exactly. Of course, you need sustenance and shelter and all that kind of stuff. But and then we've been going back historically. It's always like everybody thinks their time is more valuable than everybody else's. And it's like it's not unique. The fact that that's why you just want to build higher and higher. This I think inflation plays into our minds like that as well. It's like, oh, we got to keep going higher and higher because inflation. But we're also, as you get older, you're finding your skill. Your time is worth more because you're better at what you do. And you can get things done in a shorter amount of time, so you can bill higher amounts of money for your time. But ultimately, yeah, it's like an exchange of time almost. And so, like you said, you might be good as a doctor or a veterinarian, but you're not good at building a house. And that's why you're spending your time fixing somebody up, cleaning somebody's teeth, to exchange for somebody else to spend their time, building the shelter you're going to have. Or even it still works with the example of food because you're exchanging for somebody else to spend their time. Like food is free, really. It doesn't have an actual, what's cost is the labor, right? Like somebody had to buy the land, sure. But like for the most part, like food was created from time. You could go hunting and you could kill something, right? That's just only your time. You could plant something, you pull it out, that's only your time. So even in the sense of like food and shelter, it's still an exchange of time. Like you're spending your time doing what you're specialized in to give somebody else to do what they're specialized in. And of course, like that's how you have the free market and the economy. But yeah, that's kind of how I think of it. Now it gets obviously a lot more complicated when you have central banks and the Federal Reserve and those sort of things that are like creating debt and money. It's really easy when you have gold and it's just like, oh yeah, like I'll do this much for this much gold. There's a fixed supply, you can figure it out. But when you have an extremely complex society where it's like you have Congress, which has a debt ceiling, which they're, a central player, they're allowed to do whatever they want with it for the most part. You've got the Federal Reserve that can raise and lower interest rates, right, as they see fit. And so, a lot of times people don't, it's like, okay, I make $100,000 a year, and I see that Chipotle is $8. Like I can kind of get a rough estimate of like what my time is worth, but like it's inflation works exponentially, and we have a mandate, public mandate of the Fed to create inflation, and then of course like the government and Congress uses inflation because it's a way to pay down its debts, and it's hard for people to think in terms of exponential growth, like, and that's what inflation compounds on itself. So I think that's where it gets really complicated, and it can be very helpful because it's like you could have a salary like 1% increase a year or 5% bump every 10 years, like, and you feel like you're improving, but it's like, wait a minute, why do I have less savings? Like, why is it harder for me to go out to eat? Like all these types of things. And so I think thinking in that lens and like understanding those things helps you decide what you want to do with your time.
Yeah, I would agree with that. And there's a really good kind of quote, and I think we can get into, the money piece, but it's like the more money can be expected to hold its value over time, the more reliable an individual can use it to provide for their future self. So if you have reliability and understanding the rules of the game, and a lot of times when I try to explain things that are going on right now, and like you see, trillions of dollars being created, and people are like, well, okay, trillion, like what does that actually mean and what does it do? Well, just think of like, hey, if we're going to go back and play Monopoly, like maybe we did as kids, or I still like play Monopoly today. I know it takes a little while to play, but we play Monopoly and you have one person that's the banker and the rules change every round. It's really hard for you to build a strategy and a plan for how you're going to play that game. But if you know the rules are set at the beginning and what you can build on, you can create maybe a different strategy. But if the rules are always switching, you're probably going to make a lot of mistakes because you're going to kind of be guessing. And I feel like sometimes especially for businesses and individuals, it's really hard to plan when you don't know the way that the environment is going to be structured. Like how do you truly plan for, hey, the next 5-10 years when there's so much that if you look back just 2 or 3 or 4, it's like no one ever would have thought we'd be here, right? So it gets really hard to make those strategic plans.
Yeah, I was just recently thinking about this. It's like we don't really live in a free market, and so people they look at that and they get misguided and they think, oh well, that's capitalism, that's not working, therefore we need socialism, right? And it's like, well, you're like the frustrations that people have about the central powers intermingling with society are the same frustrations that capitalists have, which is like you're not really creating a free market system anymore. Now there's players, like when you have to go through centralization, more, I don't, there's that saying, absolute power corrupts absolutely. But like, there's more and more power. So it's like, it becomes much harder to predict because you're playing 3D chess. And so it's like, you can look, at a certain company and you can kind of predict, how well or not well they're going to do based on like that company's metrics. But like, we don't necessarily know what the Fed is going to do. And so the Fed can just go raise interest rates or lower interest rates. And like lower interest rates, the stock market rallies, higher interest rates, the stock market sells off. And that has nothing to do with the fundamentals of companies. You know what I mean? It has nothing to do with like the free market system. It's a totally centralized process. And so like, yeah, everybody is kind of frustrated. And of course, like, on the flip side of that, if you get good at predicting what they're doing, then that's just part of the equation. And you can accept that's part of investing. But I understand the sentiment of like, well, the system's rigged, it's corrupt. Let's do away with capitalism in the free market. But it's like, it's just misguided.
Yeah, I would agree with that. It's probably been a while since there's been truly free and open markets where, it's people that have connections or can have some sort of inside information that make changes. And I think there was even a lot of publicity around, certain senators or representatives making trades or doing certain things like pre things being announced. And like that should really, burn, that should boil some blood, right? And it makes people frustrated where it's like, how can they do that? Where if anyone else would do something like that, they go to prison. And that, yeah. And I totally agree with you. Like there's definitely some issues that need to be addressed. I think it's always, people can agree on there's problems. It's what are the solutions is how they want to make the adjustments.
Well, Charlie Munger says, show me the incentives, I'll show you the outcome, right? And so you had Nancy Pelosi's husband make $10 or $20 million last year on options calls that he invested in that were directly related to a bill that she passed. Like, and both sides of the aisle do it.
Yeah, we were talking about that before too. Like, it's not just a one side.
That's why they haven't stopped it, because there's no incentive in Congress to stop, because that's how they make all the money. It's absolutely insane. So when you think the game is rigged, yeah, that's like, like you said, how is that allowed? You know what I mean? That's absolutely crazy.
Yeah, it's wild.
So, all right. Yeah, well, I'm going to tie all this in together, but like, how old were you when you started like kind of looking like this deep into it and figuring this out?
As far as like trying to understand the money, all of that, yeah. I was probably a little bit older. I first heard, so I think for me, the whole dive into a lot of these concepts and ideas around, what is money, what's actually happening, the incentive structure, the way the system is built, it all really started when I went down and explored Bitcoin. And to me, that's been really that journey. So that's been 2019, which is funny because, again, you go back to when I started as a financial advisor that helps people like talk and discuss and think about money. That started in 2015. And I was at Merrill Lynch in 2017 when we had the big run up in Bitcoin, and, the marching orders from, those in higher up, right, was, hey, it's tulips, it's fake money. And, we don't really talk about it. And so when you saw the rise up to about 20K, crash down to 3, it was like, hey, see, we told you we're right. I got more interested after it didn't die, and you like didn't hear about it for a while, but I was like, hey, it still trades for something. It didn't go to zero. And that's what I think then started me getting more interested. But yeah, it takes time, and you have to already be interested, because you either come at, I think, Bitcoin from the monetary side, so like monetary policy and, that piece, or you come at it from the technology piece and understanding like, okay, how do network effects happen, and how do things grow and scale? And that's not my background. So I came at it definitely from more of the monetary piece, but I think it takes both to really understand how it works. And that takes time to learn. And when I chat with people on it or ask questions, it's like, shoot, a 30-minute or hour conversation, it's not going to click. It's going to take some time. So you need to sit with it and maybe, hear some good resources. And I think sometimes that's really intimidating, but I think the juice is worth the squeeze, and we can get into that more here later on. I mean, it's just such an interesting topic.
Yeah, though, like you said, you mentioned our pastor was talking, and he's like, he goes, and like, what is Bitcoin? He's like, no one knows what Bitcoin is. Don't kid yourself. Just like saying, nobody has any idea. It's like so funny. You could talk about it for hours and still not have a full understanding of it, because it is complex. But so, like we talked about earlier, so is our financial system. So they're both complex at the end of the day. You got to pick aside, well, not aside, but you can play in both, but it's like, there is no simple answer is the point, right? There is no simple answer. And so, all right, in 2015, that's when you said you started working in wealth management. What, what is the industry like? I mean, what did you like? And did you have any qualms as well?
Yeah. I mean, when I was at a bigger, bank owned Fortune, 20 type of company, it was kind of, you can do anything you want as long as it's, size 10 and it's a black shoe, right? Like you do anything you want as long as it's, our way. Like there wasn't a whole lot of flexibility. Yeah. And so for me, that was where I just felt like I can't do what I want to do longer term and really build what I want to build and be satisfied in an environment like that. Now, it's not saying that's necessarily a bad place to be. There's certain benefits of being there, but I felt like, independence and being able to do my own thing certainly outweighs that. And also,
ask you,
go ahead.
So, are they more concerned about protecting the downside than they are about maximizing returns? Because there's obviously volatility in the market, and so do you feel like there was clients would be happier if they underperformed the S&P on a good year, but they didn't hit as hard on a bad year?
I mean, I don't think that necessarily is kind of where someone works necessarily. Now, absolutely, is there a bigger compliance, red tape, extra over the top on certain things? Yes, but they're also managing to the worst person in an organization that's 18,000 people, right? So they're going to look at hey, the worst individual of those 18,000 they have to manage to that level versus being outside of that. You don't have to worry about the knucklehead in the one office in that one location that's going to try to do something stupid. And I think that's the biggest difference. But to your point, the idea of, hey, you need to outperform or do this or that. If you're able to compound wealth, and I think a big thing to understand is what is nominal returns, which is what my statement tells me. So maybe my statement is telling me, hey, I made 10% this year. Is that good or bad? I don't know. Well, right. What was inflation? What was taxes and what was fees? So what is your real return after all that stuff? And then did it grow your purchasing power? And so I think more people, and especially this past year, so in 2021, inflation came back into being in the lexicon of what we talk about, where people are like, it's front and center. Here's inflation. What is your real return? Because if inflation's 6.8% or 6.2% and you made 7, well, that's not great, because basically you didn't do anything but match what inflation was. So you want to understand and build real returns. And that's where I think if you go back to the idea of, dentistry and veterinary medicine, and you have a private practice owner, they're in a great spot because you can look at, there's a demand for that service. You can raise prices. You can ensure that you're continuing to grow. And so if your business isn't growing at that level of inflation, then yeah, you probably are shrinking. And maybe you need to look at kind of the things that are going on within your business, because both of those businesses are really profitable. You know this as well as I do, really profitable businesses that are significantly more profitable than the average US business and can do a lot of great things. And there's, demand, and it's also really resilient to, economic shocks. Whether you look at, COVID, yeah. Now dental definitely shut down and had some worrying times, but best years ever. I've heard that from dentistry, from dentists and veterinarians in 2020, right? And that was wild. You would have never thought that in April of 2020 that you'd have a banner year with all that madness going on. So I just think from that standpoint, a lot of times from an investment piece, it's like, shoot, your business is a really, really good spot. And if you're maxed out at capacity, you can't expand. And I think that gets into the real estate piece as well. But how do you want to invest? Because you have a different toolbox, right? I can't go reinvest in my dental practice. I don't have that skill set. I don't have that knowledge, same as you. But for a lot of dentists and veterinarians, it's just look at reinvesting back in your business, because there's such a good return there versus sometimes diluting yourself, because the idea of, concentration builds wealth and diversification keeps it is very, very true. And if you look at a lot of people, it's buying index funds is great. And then there's a lot of benefit to doing that, but that's not going to outperform a well-run hospital, well-run practice. So
concentration builds wealth, diversification keeps it. Okay. That's a good way to think about it very simply. Have you ever heard of the book Millionaire, Fastlane?
I've not read it.
So he kind of just talks about everybody talks about oh, I want to get rich and I want to start investing and I want to do all these things. And it's just dude, you're never going to get rich investing, $500 a month. in the S&P. Like, you know, at an 8% annual return, like it'll literally take forever. It's like, focus your efforts on your business. Like, instead of getting an ROI of your money, when you have no money, focus your ROI on your time, like we were talking about earlier. And so it's that same thing. Is like, yeah, find a skill, specialize it, spend all your time in it, dive head first, put in 60, 80 hours a week. It's not forever, but for a time frame. And so you build a sizable amount of money, right? Until you have some sort of net worth that now, you know, 8% is all of a sudden significant. Because like 8% on $5,000, right, a year, like you're just, you'll literally be working your entire life. And so it was like, it's like what you said, like, okay, and there's a time and a place for it, but it's like, let's focus on my business. Let's build this up. Let's create, you know, I'm getting a good return on my time. Let's dive into this. Let's hammer this. And it's like, I think I was guilty, and I know a lot of other people were guilty of like diversifying too early. It's like, oh, I see people day trading. I see people making all this money. And I never got into day trading, but like, we see that now. Or it's just like, for me, it was like, oh, I got a little bit of money. Where can I invest it? And like, it's not a bad quality to have, but like, it is bad if it takes away from your focus on doing what you're doing. And so like, you know, if what you're doing is working really well, it's spitting off cash, sure, put it in S&P 500 all day. Absolutely. It's better than blowing it in Vegas. But if it's between like investing in the market versus like reinvesting it, at least a portion of it in your business where you're getting 20, 30, 40%, and you can continue to compound that, then I think it's a no-brainer.
Absolutely. Yep. And it's just, yeah, getting to the point where, and debt is a big thing, both in dentistry and vet med, especially for younger doctors, student loans. And a lot of times I'll have conversations, it's like, well, how can you pay off your student loans quicker? Well, it's raise your income. How do you raise your income? Well, it sounds simplistic, but if you're able to have an ownership stake, maybe buy in, maybe start your own business, like, yes, there's going to be that kind of initial investment period, but then you're going to see the return on the other side. Like, that can really help. And the fact that, going back to the idea of debt is cheap, if I can go borrow fixed rate debt for a long extended period of time and invest in a business that is going to give me that kind of return, seems pretty good. Like, I'll go borrow at 4.5 and go get 20, 25% on that. Like, that's great. Like, I'll do that all day. So that's something that I think it depends on how they're wired. I think it's not necessarily like, oh, well, dentists get it better and veterinarians don't. Like, it's how someone's wired. Again, going back to like, what is money? How were they raised? What kind of values were they raised with? And a lot of people that I think come from that Dave Ramsey mindset of like, debt is evil and I have to pay off all this stuff before I can do the next step. Sometimes it's really hard for them to get past that. Like, oh my gosh, I have $200,000 student loans. I don't want to go get an $800,000 practice loan. It's like, well, let's understand what this debt is. It's not the same as credit card debt. It's not consumption debt. This is, you know, a reinvestment into the skill set of, you know, what you worked on for so long. Yeah.
100%. And, you know, like you mentioned Dave Ramsey, it's like it's like on one end of the spectrum, you got Dave Ramsey, on the other end, you got Robert Kiyosaki from Rich Dad Poor Dad. And I think Robert Kiyosaki explained it very well. It's like, Dave Ramsey is great advice if, you know, you don't understand money and risk, and you're not comfortable with risk, or you feel like you're going to make bad decisions, or you don't have good discipline, or really, if you don't want to get your PhD in finance, right? Like, if you don't want to spend the time learning about money, having these conversations that we're having, reading the like articles, reading books, listening to podcasts, staying up to date, studying it, investing with your own money, trial and error, right? Like, it takes capital allocation is like, you know, I heard somebody say it's like the number one job of the CEO, right? But I think also it's our number one job, you know, as you know, individuals or heads of the family. Like, I have a family, right? It's like nobody can really decide my capital allocation. Like, you're a financial planner, right? So that's what you do. But the person has to agree to use you. That's their decision to allocate capital to you. And if you don't want to spend your time learning about it, don't take on debt at all, right? Pay everything off. Don't pay any interest because it is risky. However, if you're willing to get your PhD and you're willing to learn, then it's a great thing. I mean, debt is absolutely the way that you get out of the rat race. I mean, if you know, it's a way, like you mentioned earlier, if you can get debt at 3.5%, 4%, you're getting 25% returns. That's a great investment. You know what I mean? In real estate, returns are 8, 10, 12%. It's still great if it costs you 4% to get that. You know what I mean? It's a formula. And especially like you look at the inflation rate of 6%. You can get on, like, if you can get a piece of debt on an asset for 3 to 4%, that's 2%, 3% lower than inflation. You can pay it off over 30 years. In 30 years time, you think that money is going to feel like a lot of money? With inflation? No, it's going to feel like the payment's going to feel like absolutely nothing when you're locking that in over a fixed term. So yeah, I think it really just depends on more so than your risk. I think risk tolerance is important, but I think it's how much work are you willing to invest? How much time are you willing to invest to really learn and understand it?
Well, I think too, it's also what's your cash flow look like and how consistent is cash flow into your household? Because it's fine if you are adding debt that's a fixed rate that you know that, hey, I have this payment. But if you then have like really lumpy income or aren't really sure where things are at, that can get dangerous, even if it is a low rate. But to your point, it's almost like assets and liabilities have been flipped, where if I am a borrower and I know what to do with this pretty cheap money, that's a big advantage versus if I'm a saver, but I'm not sure where I want to do it, but I'm just going to save and work really hard and just put it in the bank, you're getting punished, like absolutely punished.
Yeah.
The idea that you can go work hard, take your dollars, put it in the bank, and you're going to have money to retire, like that's a melting ice cube. And whether it's in Indiana or whether it's in Florida, right? You take an ice cube out in the summer, you set it on the hot concrete, it's gone. I mean, it is gone.
Yeah.
And that evaporation is happening faster and faster as, we see the creation of new dollars coming into the system.
Well,
so
let's talk about M2. Yeah.
Yeah. So just to give you an idea, so M2 from about 2001 through 2009 grew at about 5% annualized. So that's fairly quick. And if you look across the globe,
Hey, let's explain M2. You're talking about money creation.
Yeah.
Right?
So M2, let's back up. So what is M2? So M2 is near cash, checking, savings. So just think of like the amount of dollars in circulation that would be out there that would be easily accessible. So that's what M2 is. Then, so going from like 2001 through about 2010, 5% annualized growth. Still, that's healthy, right? I mean, that's, if you're not seeing an increase, you're going to feel like you're falling farther and farther behind. So again, go in for your performance review, get a raise. Oh, my raise is 2.5%. Well, okay, that seems, you're not maybe keeping up as much. From 2010 through 2020 was 7% annualized growth. So speeding up a little bit. 2020 through the end of 2021 was 18% annualized. So we saw this dramatic, massive amount of creation with stimulus.
That's according to the CPI?
That's according. Yeah. So this is coming from the FRED system. So this is directly from the Federal Reserve, and this is the M2 chart that they publish. So that it's the board.
I actually heard that it was 35% of like total money supply ever printed was since March 2020.
Yeah. So this is annualized figures. So yeah, 75% of all U.S. dollars that have ever been created have been created since 2010. So this would just be the growth year over year. So yeah, there's a lot of money that's sloshing out there, and I think that you hear that and it's like, wow, this is wild, and there's all kinds of things to understand about like what is M2 and how it's calculated, but we can all feel it. So like when you look at inflation, we talked about it earlier. CPI is this like basket of goods that the federal government comes out and says, this is what the cost of living is going up. That's at a 35-year high at like 6.8%. If we look at the last reading, which was just December.
So probably, like we talked about earlier, probably underreporting. Like realistically, it's probably a lot.
Yeah, and everyone's going to have their own CPI basket that's different, right? So then you have to measure it. So where do I live and what am I trying to do? So typically you're trying to probably maybe buy a house. Maybe you need a new vehicle. Maybe you're trying to pay for college education. Maybe you need healthcare and you're trying to get that for your small business. All those things, if you look at year over year increases, are massive. Rents around the country, 20%. And that's averaging across everywhere. That's saying Des Moines, Iowa, and Miami, Florida, right? So that's everywhere. So you have to look, specific to the area that you're at. Housing, depending on where you're at, same thing, 25, 30%. Used cars, like good luck trying to find what you want. But I mean, it's similar ballpark. So I mean, that is truly what inflation is the things that you want around you. We can talk about M2, we can talk about all kinds of stuff, but yeah, just go to the store and try to buy meat. What's your ground beef? What did it cost 24 months ago? And what's it costing today?
Oh, okay. Yeah. And here's what I don't understand. How can we have created 75% of all the dollars in circulation since 2010? That would imply before 2010, we had 25% of the money that we currently have. Now we have 100%. That's essentially, a tripling or a quadrupling, whatever the math is, of the money supply. We have not seen a tripling or a quadrupling in the cost of living. Why is that?
I think I lost you for a second.
Did you hear what I said?
Nope, I think I lost you for a second. Sorry.
Okay, yeah. So here's what I would like to understand better that I don't understand right now. If we've created 75% of all of the U.S. of the dollars in circulation since 2010, 12 years ago, so that means up until that point, we had 25% of the money supply. Now we have 100%. That's essentially like a quadrupling, right, of the total money supply. Why have we not seen a quadrupling in the cost of living since 2010?
Well, what you've seen is the money is going to go. So people are smart, right? They're going to go and say, where can I take this money that's going to be the best store of value, or the place that is going to keep up with the amount of creation? And so you look at cost of living and you look at these different things and you say, well, shoot, everything should go up by that amount. But let's look at assets. So real estate, stock market, bond market, all-time highs, hitting all-time highs all the time. Well, a lot of that newly created money is just finding a home into these financial assets. And that's kind of the idea of like monetary inflation, asset inflation, where it's just going to go into the assets that are out there for people to store it. Because if you're able to get it and you're able to borrow cheap, you're getting a PPP loan, you're getting these different things, you're able to push it in. Look at the value on real estate deals that you're doing now versus what you did a couple of years ago. What are the practice valuations for a dental practice or a veterinary clinic? Massive differences for what they were selling for, 36 months ago. And that amount of cheap money that's out there is all chasing the same amount of goods. And so that's what's driving those prices higher. But it's not always necessarily your specific cost of living. It can just be some of the other goods that are out there, like high end. If you look at art markets, you look at all these different things like high end goods, like those prices, those store value things are astronomical as far as pricing.
Has anything quadrupled, right? Am I understanding that correctly, right? Like if 75% of all dollars have been created in the last 12 years, that means we've quadrupled the money supply. Is my math right on that?
I don't think so. I mean, it would be.
Or did we triple it? But you see what I'm saying? Yeah. Like we would have only had 25% up until that point.
Yeah, and that's the hard part with like a stat like that, because you think like, oh, there was no money before that, right? Like, no, there still definitely was. And the thing is, when you try to, I think, unpack and get to the heart and the crux of all that new creation, where does it go? Where is it flowing through? And why isn't it impacting? Because it's not going to impact everyone the same. Because again, what you're trying to acquire might not be the exact same thing that other people around you are trying to acquire. And it's going to be different in different parts of the country. So, the property values in, rural Minnesota are not going to keep up with the Austin, Texas. But you've seen massive growth. We have an advisor that lives in Bozeman, and Bozeman real estate was up over 100% year over year because we have a lot of people leaving from California. So there's like pockets of places where it's going bananas. But there's other places like where I grew up, real estate's still going up, but it's not going to go up like that because there's not the demand for people to want to be there. I don't know if that's answering your question or not, but it's a good, I don't know if I'm the right person to dive all the way in that, right? Like that's a great question.
Well, I realized last year, so it's like, essentially the government wanted to print money or create money they call it stimulus, right? So wanted to create stimulus in order to help the little guy, in order to help the people who are poor, in order to help people who couldn't make ends meet. And so they just, it was like a $1,200 check. And then they created these PPP loans for a lot of the companies that would be, which rightfully, I mean, if you do shut down, if you are the organization that causes businesses to shut down for whatever reason, I believe you have a responsibility to help them, right? Now, personally, I don't believe we ever should shut down. I believe like the data was like so misconstrued, but it doesn't matter because we did. So we shut down. Okay, so now you do have an obligation to them, right? And then it's like, so it's almost like a facade of doing the nice thing, like of being generous, of being compassionate, because like in order to give people stimulus, well, you have to create money. And what happens is that goes into drive up the price of assets. And so then that creates inflation. And the people who really need the money the most, who you're supposed to be nice to, yeah, sure, $1,200 today feels great. It really makes a big difference. But that now gets circulated into the money supply, and the cost of the living is going to go up by that. And so these people who are wage earners don't have assets. They can't afford assets. And the people who are asset owners generally aren't the wage earners. And so it creates this disparity. And it's like, you have to know that when you're going into it. Like if you have any sort of sophistication, you have to understand that printing money and giving handouts to people creates a wealth divide. But they still continue to do it, and because they get the votes for it. But it's like at the end of the day, the people who vote for it, and I guess everybody voted for it, but they're the ones hurting themselves. And It's like
It's an addict.
it seems so corrupt.
You're giving
is all.
you're giving the junkie the drug that's going to kill them. Is exactly what it is, because they fall farther and farther behind. You're spot on, right? It's the people that already own. Yeah, if I already own a bunch of commercial real estate, have my own home basically paid for or locked in with a 30-year mortgage at 2.5%, have all the stuff that I want, already own stocks, bonds, all that stuff, then you're golden. If I'm 25, tons of student loan debt, trying to get by, scraping, I'm never going to get caught up. I'm just falling farther and farther behind because I can't afford rent when my lease is up and the rent roll and they change it and they're like, hey, it's going to be X amount. I got to find somewhere new to live because I can't continue to pay that because the cost of maybe their salary, they just didn't get the same raises to offset that. And
I think that's a side effect when you have a centralization of power. I think I don't think anybody in the U.S. is more altruistic than any other country around the world. I just think the founding fathers did a really good job of checks and balances, which created decentralization. You had the three different branches because they saw what happens with centralized power. However, over time, our politicians have gotten better and better and better at manipulating those three things and creating coercion to work together. And so, now I look out there and it's it doesn't seem like we have that many checks and balances.
Yep. Yeah, it's a lot easier to have things happen that, people would shudder to think that would have ever happened, 10 years ago. There's no way that could ever happen. And I totally agree.
Yeah. So, I don't want to be a doomsdayer. I believe that things can simultaneously get better in some areas and worse in others. And so there are some things we need to be careful about, but it doesn't mean quality of life can still continue to go up. But all of that, it kind of leads into Bitcoin, right? Which is why it was created. It was created in 2009. When were the white papers written?
You're correct. So 2009, and then I think it was Halloween in 2008, I think, or maybe it was. I know it came out. The initial white paper came out on Halloween, and then the first transaction was broadcast then that following January. So because it was just 13 years ago.
Essentially, it was a response to the great financial crisis, right? It was okay.
Yep.
Satoshi Nakamoto, he looked around, whoever he is or whoever they were, whatever group it was. They saw okay, these banks were making really risky loans. They got themselves in a really bad situation. They were unable to pay their loans, and instead of the free market letting these banks fail that engage in risky business to maximize profits, government stepped up, got involved, bought their debt, right? Gave them loans to bail them out because I don't think that was nefarious. I just think it was a case of, not being educated or not really understanding what's going on because if these banks fail, the whole economy cascades, we got to help them out. We got to do the right thing. We got to buy their bonds, blah, blah, blah. But really that's not the free market, right? That's not letting the winners and losers fizzle out. It's incentivizing and rewarding bad behavior. And so guys like Satoshi Nakamoto and then a lot of other people, that's how you created the what was called Occupy Wall Street movement. They saw that happening. And so Satoshi he did something about it. He created a trustless, digital, non-fungible currency. So that way the banks couldn't control it. They couldn't create more of it. They couldn't pass it. It was just it was whatever was created is there. It's verified through the blockchain and through encryption. So, makes sense. It makes a ton of sense. I want to hear your opinion on that. And also, I think what's been really surprising to me is the end of 2021, halfway through the year, beginning of 2020, Bitcoin was supposed to be this uncorrelated asset to the stock market and it's everything that's going on. Historically, it always was completely uncorrelated to stocks, to bonds, to everything. It was its own asset class. Now, because all these hedge fund guys have bought in since 2021, it feels like it's directly correlated to the market. And so it's a little bit frustrating when you thought you're buying this uncorrelated asset that would be all of a sudden wait a minute, this is moving in tandem with the market. So I'm curious about how you process all those things.
Yeah. So I think the biggest thing is trying to get your arms around what is Bitcoin and what is it trying to solve. And I think at the end of the day, the easiest thing to think about with Bitcoin is it's just money. It's better money. It's a way for you to take the labor that you have and store that value over time. And one of the big things is, back when we had the gold standard, you could secure your wealth, the value that curated really well over time, but you couldn't really do very many transactions over space. like I couldn't send my gold around the world very easily. So I needed like paper notes or something to do. And so like fiat currency and these things that were created helped make that happen. Well, Bitcoin just combines both because it's digital. You can whip it around the world for, pennies to move, a massive amount of value. And it also holds time, or like it holds its value over time because it is scarce. So Bitcoin in and of itself is, it's an asset. So it's like, it's a money, and it's also a network because it is decentralized. So there's things that you can do with that network as well, which add value, which is, I think, probably like a next like level to think about it. But again, there's a lot there to unpack. Think of it though, at the base case, like this is money. This is really good money. And then from the standpoint of like an investment, because a lot of times people will be like, hey, you're a financial advisor, how should I invest in Bitcoin? I look at it as, hey, this is a savings technology. But yes, to your point, there have been a lot of people that have adopted it. So Paul Tudor Jones, Bill Miller, like these big older school hedge fund people that, have come out and been very pro Bitcoin. Bitcoin does trade like a risk asset today. But the biggest thing to understand with it is going back to the financial crisis where it kind of cascaded all this risk. So you think about what's called counterparty risk. So if I have, let's say, a trade on, or I think that something's going to happen, but I have to have it executed by this other third party, I still, for me to get my payout, have to have that third party, be able to pay me at the end of the day and not go, belly up, which was some of the problems in 2008. The cool thing with Bitcoin is there's no counterparty risk. There's no one else there. And so it is unique in that fashion. But part of the monetization process of any asset goes from collectible to store of value to medium of exchange to unit of account. So we're kind of in between this storage of value and this medium of exchange. Like we're kind of in this weird little window, and I don't know how long it lasts, but mainly when you hear people advocate for Bitcoin today, it's store of value. Digital gold, that's kind of what they say. It's a lot more than that, but that's kind of the use case for, I think, a lot of the investors today is, hey, it has a scarce element. It's a way to protect myself if the money printer continues to go, and I can hold on to this. At least it will sustain the same amount of value that I put into it versus just always having things devalued, because that's the big thing, right? You look at the S&P, but then measure it by the growth of the money supply, and it's not nearly as attractive. And so you can always try to lie with statistics. I think that's important. Like, hey, maybe Isaiah, maybe Austin have this view on this certain thing, but you also need to understand, at the end of the day, it's all about keeping up with purchasing power. And so if you look at something like Bitcoin, back in 2017, 350 Bitcoin bought me a median new house in the United States. Today it's 9. So if you have a long-term goal and you're trying to save for it, I'm not saying that the past performance guarantees future results. I think that's a dangerous place to go. But if I know that I can save for something that's going to be, longer into the future, years, not months, Bitcoin is a great way to save for that because it helps make life easier and cheaper. And so that's kind of the way I look at it. But I think right now, if you want to just zoom into like 6 months, say, oh, it's trading in line with, stocks and risk on and risk off and this and that. Yeah, it's going to go through those periods, but ultimately Bitcoin's going to do what Bitcoin's going to do. And it's going to absorb value that's been stored in a lot of other assets across the world. I think that's the way that I look at it.
Yeah, I that makes sense. For me personally, my decision to get into Bitcoin was always interesting. I didn't know whether it was going to switch the world's global monetary reserve or not, but I know, like, it's just crazy to me that a guy named Jerome Powell can snap his fingers to raise interest rates or lower them by a couple basis points, and that creates so much economic fallout one way or the other. And so that just intrinsically feels weird. And so I can't quite, I can't quite put my finger on it, aside from the fact that it's just like one of the effects of centralization. So when I thought about Bitcoin, it's like, okay, this is obviously decentralized. I mean, that's the huge part about it. But also, it's kind of like an insurance policy for me. Like, I think it's like 10% of my liquid portfolio is in Bitcoin and a couple other percentage points in different cryptos. But it's like, it's kind of like a just in case thing, because it's like, I don't know, it could. I still don't know if it's going to go completely to zero, right? Because there's no, like, it's really based on code, which, sure, we talk about time. You're exchanging time for money. So somebody spent their time building that code. Just a question of, like, was it worth as much? I mean, it's $1 trillion. It's $1 trillion market cap right now. Was their time really worth that? I don't know. I mean, I believe there's something important about being first to market. There's a lot of other competitors that could come along and eat their lunch in terms of the capabilities and the technology, but that's not really the point. The point is to be able to store your value. And so I get that. And I like how, because like you saved 100 grand, in the year 2000, it's a lot of money, right? Now that's worth about half. Like you got about half that purchasing power. And so maybe not, maybe a little bit more, right? But it's still crazy. That's crazy, right? If you had bought the Bitcoin or gold or whatever, and gold is a little bit volatile, but like the idea with Bitcoin is, doesn't matter how far down you go in the future, you're not gonna have people raising lower interest rates. You're not gonna have people deciding to create a bunch of money because there's a pandemic. Like you know exactly how much it's gonna be. And so I totally get that. I'm 100% on board with that. But I get a lot of people asking me like, where's the underlying value? Where does it come from? Because gold, at least the worst case scenario, it's shiny and it looks cool and you can make it into jewelry. Now, is that enough of a reason to propagate gold like indefinitely into the future, to keep it from ever going to zero, versus like the fact that Bitcoin will never be used in and of itself, like to create, gold or jewelry? And I know the dollar is essentially nothing. It too, it's just backed by the U.S. government, which, they have all the guns. Is what it comes down to. But like, you know what I mean? Like, how do you answer that question when somebody says like, where's the intrinsic value come from Bitcoin?
It's a great question. I think if you understand the origin story of Bitcoin, and I view Bitcoin and crypto as two different things. A lot of crypto is VC backed, and Bitcoin did not have that origin story. Again, it was, he, she, they, unknown, created it. It had little to no value for a long period of time, where a lot of the other, cryptos have been created that they're dinos, decentralized in name only. Like there really is not a lot of decentralization. You go to Amazon AWS servers and start unplugging things, they no longer run. That's not very decentralized. If there's like a single point of failure, there's a founder, that's a company. That's not something that's decentralized finance. And so I think it's really important for people to understand, and like there's way more to that to unpack, but just for the quick, 2 cents, like to me, I don't think Bitcoin and crypto should be viewed in the same lens. I think you view crypto as VC investing. That is really not gated like traditional VC investing, where you have to be accredited and all that other stuff. I think crypto will have a day when the SEC will come along and maybe make some issues with them being securities. I don't hope for that, even if I don't necessarily agree with a lot of the crypto ecosystem. I have no problem if people make a bunch of money on a dog coin. I don't care. That doesn't bother me. That doesn't change why I want to own Bitcoin and why I don't want to own that. But I think, again, going back to let the free market do what the free market's going to do. And if people want to gamble and do dumb things, let them do it. So the value of Bitcoin, right? So going back to that, because that's really, really important to understand. Again, I don't know if I'm going to have the perfect answer for you. I will just give you the way that I look at it. And then you can obviously make the determination. But when you think about the total addressable market for money that no one else can control and change, that market is very large. So there's 900 trillion US dollars like out in the marketplace today, that go into a lot of things that don't make a lot of sense. But so having something that I can hold, custody, control, that is scarce, that no one else can affect and change.
Like, just to clarify, you're talking about having a cold storage wallet or like an actual hard drive. You're not talking about putting it on one of these like Coinbase, BlockFi.
Yeah. So you're able to, you can take self-custody. So you can get a hardware wallet, you back it up, you hold the keys. So
are you referring to either one of these two?
Yeah. So Bitcoin ownership is derived by who owns the private key. That is Bitcoin ownership. Okay. If you have to ask for permission to move it from an exchange, you technically don't own it. You have an IOU. I mean, that truly is the way Bitcoin is who owns the private keys, full stop. Like that is the way that ownership is derived in Bitcoin. And so if you want to truly own it, you need to hold your keys. Now that can take some time for people to learn how to do that, but it is not that intimidating. But when I look at, the elements of Bitcoin and what gives it value, scarcity is one. I've had people argue with me like, well, just because it's scarce, so are Beanie Babies or something else. Well, I get that. Everyone is going to have to determine what has value. We in the West are a little bit spoiled because as much as we've kind of crapped on the US dollar and all the issues, we have a fairly stable currency, right? Like it's not like we wake up one day and all of a sudden 50% of our purchasing power is gone. A lot of other places around the world have those issues. So the ability for someone not to control what the money is worth, again, going back to kind of the Jerome Powell comment, you don't have someone that can come out and say, hey, I'm going to create more units. With Bitcoin, the rules of the game are published. Everyone knows it. It is a consensus system where everyone opts in and holds everyone else accountable. I don't know if anyone's seen the Spider-Man memes where everyone's kind of got the guns pointed at each other, or The Office when they have the kind of game night and they all are kind of doing, this like finger guns at each other. That's what Bitcoin is. It is verify and then trust. And that's the beauty of it, is that everyone's holding everyone else accountable. So everyone knows the rules of the game. And if you try to change the rules, you're out. Like, you're going to not see and be able to hold that value. So I think there is a scarcity element to it that makes sense. Network effects is really important. I think just deriving value, any $100 billion dominant digital network that's happened has not been unseated. Facebook, Apple, Amazon, Twitter, Google, YouTube, all once they hit $100 billion, these digital networks are entrenched. Bitcoin, as you mentioned, $1 trillion. It's a little bit more than 100 billion. So that is not going to go away, because I hear people say, well, you know what? It's going to be the MySpace and something else is going to come along. The challenge with that is, and you may...
Wait, real quick, how big did MySpace get, or was there just no valuation? What was it purchased for?
I don't know. I'd have to look it up real quick. It's obviously less than 100 billion, because it's not, because that's the stat.
Yeah. So in your opinion, 100 billion is kind of like a number that's so big it can't fail at that stage.
Yeah.
Is that kind of what
yeah, because you have network effects. Like when people start saying like, oh, I'm going to Google it. I need a Kleenex. Like, there's just certain things that are in our vernacular that we start using. And, you see that entrenchment. And that's really what I think is super important. And going back to the idea that you said, like, hey, there's other, competitors. I don't really think there are other competitors to what Bitcoin is today and what it will be in the future. Because if you're comparing things on monetary properties, there's nothing else that competes with Bitcoin in the crypto ecosystem. There are things that are going to compete on, speed of transactions or different things, but they are all, to get quicker, everything gets more centralized. And so it's like, what are you competing on? Are you wanting decentralized, or do you want things that are more centralized? Because yes, of course, if it is more centralized, you can run things faster. That is true. But the other thing that people don't really understand with Bitcoin, and this is getting probably far more into the weeds than what we want to. So there's Bitcoin layer 1, which is this, every 10 minutes, there's blocks that are created, very secure, fantastic, like this digital gold, like this money, this base monetary system. Well, then it scales from there, and you can build on top of a really good foundation. It's the idea of, kind of the biblical prophecies, like the biblical stories. You're going to go build your house on sand. You're going to build it on a, solid rock foundation. Like Bitcoin is built on a rock foundation, where a lot of crypto projects are built on, hey, let's, use the VC model of let's move fast and break things. Well, that's not really good if I'm going to try to store value or have money in something. So that's a big issue with.
Are you like a Bitcoin maximalist, for lack of a better term? Like, do you have other cryptocurrencies you believe in, or just Bitcoin?
Yeah, I think there's money to be made in other cryptos. I think Bitcoin Maxi, I will proudly wear that badge if that's what someone wants to, deem me as. I just view it as, I've done research and I've looked into things, and I said, I think there's one that makes sense, and there's one where I think the value makes far more sense than anywhere else. And as far as what is the issue that it's solving, I think at the end of the day, like, what is it solving? What is the value for good money in the world? And if you look at even just negative yielding debt in the whole entire world is about $18 trillion, which is a ton of money, where you literally are giving your money to someone else and guaranteed, we're not talking about inflation, we're not talking about taxes, we're not talking about any of that stuff, guaranteed to get less money back. And, if Bitcoin just absorbs that, which is a low bar, it's a lot. It's about $855,000 per Bitcoin. And it's going to eat into things like real estate. It's going to eat into things like gold and, the stock market, all these other places. So there's going to be value that accrues to Bitcoin. And yeah, to me, I think that's the adoption story of this, next decade plus. And I think as long as you have the right time horizon and you're not speculating that, hey, number's going to go up and I'm going to become a gazillionaire and drive my Lambo and have all the toys tomorrow, and just use it as a savings technology, it's very powerful.
It has left.
How much upside?
Runway do you think? Yeah.
Price predictions?
No, absolutely hold you to this number.
Yeah.
No matter what.
I have always said, and again, this is Isaiah's opinion, not anything with Vincere, like all those qualifiers, right? I think we could see 7-figure Bitcoin in this decade. So something north of $1 million per Bitcoin, and it's trading at something like 42,000 at the date of this recording. So do with that what
I'd be happy
you will.
if you guys 100.
Yeah. So again, 90% of the supply is already out into the marketplace, which that happened at the end of last year. Just the idea of decoupling the government and money, because it didn't ever have to be that way in the past. Like, people selected what was the best form of money, and now it is kind of like you are compelled and kind of forced to adopt money that isn't maybe the best money, but it's just, that's the way that we are forced to use it. And so, yeah, when I go back to what is the value of it, it is, what is the value of money? Well, if money is a social construct and something that we all put value on differently, then, you know, it can be whatever it is to that individual person. And I think to a lot of people, having the ability to have something that no one else can control, and that they can have sovereignty over their money and not have someone in, you know, a suit somewhere else make a decision that basically is taking the value that they've created. I think there's a lot of value to that.
Yeah, and I agree with all that, which is why I own it, right?
Yep.
Why I haven't sold any of my Bitcoin ever since I bought it, and I don't really plan on it, but I haven't put, you know, it's been 10%. I'm just curious, what percentage of your portfolio is in Bitcoin?
Significantly more than 10.
More
every day.
Okay.
Yeah.
Yeah.
It is a significant portion. I would put it that way.
Okay. So, and then, you know, I'm struggling to reconcile two conflicting thoughts that I have in my head, because by one token, it's like, how do we expect, here's another thing that I like about Bitcoin is it does give the Fed and the banks, you know, even Congress, a run for their money. Like, it's a competition, right? Like, they can no longer just kind of do whatever they want, like, without consequences, because, like, now there is this competitor. So that's by, like, just naturally going to create competition and hopefully force them to make better decisions, right? Like, less just money creation, less stimulus packages, because it's like, okay, people are coming out of the dollar and they're switching into this competitor, which is called Bitcoin. But the two conflicting thoughts are, by one token, I think, like, okay, how can the government ever really allow this to happen? Like, that's one of the reasons I'm putting, like, you know, one toe in is, do I believe that they're going to allow, like, the government is going to allow this, you know, totally that's not unregulated, it might become a little bit more regulated, but like this uncorrelated, uncontrolled, decentralized asset become the world's, or even the countries, which really the dollar is the world's reserve currency. I mean, it's what the oil is pegged against, right? So is the government really going to let this happen? But then here's the other argument to that is, like, well, who is the government, right? Like, do we believe it's these guys in smoky back rooms? Like, you know, if you look at the actual politicians, I mean, they can't get anything done, right? Like, they disagree on everything. And sure, we do have insider trading, we have corruption, of course, but, like, that doesn't mean that they'll be able to come together enough. Like, do I believe that there's, you know, some guys behind the curtain, like, pulling all the strings that are going to go and say, like, oh no, this is not allowed because it's infringing on our wealth? I mean, that's hard. That's another thing that's difficult to do too.
Yeah, what I would say, the government, like, hey, the government's going to ban it. I hear that a lot. So you have Cynthia Loomis, who's a U.S. Senator from Wyoming, on the Senate Banking Committee. She owns, I think it's reported, you know, somewhere between 5 and 10 Bitcoin. And then you have Warren Davidson, who's a U.S. congressman in the Ohio 8th District. You have, you know, mayors around the country. So Suarez down in your, you know, neck of the woods down there in Florida, in Miami, talking about it and trying to be like this crypto capital. He's a little bit more crypto than just Bitcoin, but he's taking paychecks in Bitcoin. One of the things that's interesting is you go back to the hedge fund folks that you talked about owning Bitcoin. You get entrenchment with people with already kind of what I would consider old money with connections. It gets harder and harder to ban it when you have people that know people with money. And then the other thing that you're going to see is just the game theory of if other countries start adopting it and attracting talent. So most people probably have heard, you know, El Salvador did it. Now is El Salvador the, you know, place everyone's going to flock to? I'm not necessarily saying that, but there will be more countries that will adopt it as legal tender, and they will say, hey, if your government's not treating you well and you want to start a business, we have really advantageous tax laws. Bring your Bitcoin here, start your businesses, and we're gonna allow you to be successful. And you know what people do? They march with their feet. Look at what's happened in the United States. What states are attracting people? States that are free, that are open, that are encouraging business. What states are losing people? States that have, you know, they're overstepping their legal authority, that are doing things that are outside of what people want, and they're flocking and leaving and saying, I'm out of here. And so people will vote with their feet and their money. And I think that's ultimately what happens. And so the United States wants to get really forceful and say, hey, we're going to outright ban this. It's illegal to own it. Sure, there will be a lot of people that will sell and say, you know what, I'm not going to own it. There'll be other people that will say, I'm going to own this in spite of, and just double down on it, right? So they're going to, force the hand. And then others are going to say, where else can I go that I'm going to be treated better? And I think that truly is what will happen.
Yeah. That's what you need, right? Like you need, again, I've been really focusing on this concept of decentralization. You can take it to the extreme and have anarchy. I don't necessarily think that's a good thing. I mean, who knows? Maybe it is, right? But like just realizing the centralization of power is what has caused a lot of problems in the world. Like even with, when you had with religion, right? Like you centralize all power through the Catholic Church. Like there was a lot of corruption that happened in there, right? And so then you had like the decentralization where you could, have different religions. I mean, not religions, but different
kind of sects. Like denominations
right?
is the word I was thinking. Yeah. Yeah.
Thank you. We go to non-denomination. So anyways, I'm just realizing that, it's like thinking through the lens of centralization versus decentralization. And so, as the United States has become more and more powerful, right? But then they create these allies and these treaties because it's like, okay, well, the United States is not as free of a place as it used to be. Like I think we saw that when we had to get locked down and we had to wear masks, and these taxes have been going up like a lot for all these. We get taxed for all these different things all these times. So, but then the question is, well, where do you go? You know what I mean? It's like there's no good. It's still the best place to live. Still the best option in the entire world. But it doesn't mean obviously it can be better. So I like the fact that these other places are accepting, Bitcoin as their reserve currency because it allows you to go someplace like that could, and I don't know the outcome, right? There could be unforeseen side effects. It could backfire, right? Like I don't really know, but it's exciting to think about the prospect of creating some competition for the United States because it needs it. It needs it, right? Like I just think too much centralization and too much power. It doesn't matter if you're the government. It doesn't matter if you're a massive business. You know what I mean? It doesn't matter whatever it is. Like it's very, very hard to, do the right thing for the right reasons and create good outcomes for everybody, for the majority and not just a few.
Yeah. And I think one thing just to add on that from the standpoint of businesses themselves, you can opt out if they really wanted to and use Bitcoin as far as a means of, again, going back to medium of exchange and unit of account to where you could truly run an economic system on Bitcoin. And that gives the freedom for a lot of these places that maybe don't have the banking infrastructure built out. People have mobile phones. You can run all of it on a mobile phone and interact with that network and plug in at any place around the world. So it's really powerful. The other thing that just going back to kind of tying in the veterinarian and dental pieces, when you accept payment and you accept credit card or ACH payments, a lot of credit cards, right? You're paying 3.5% plus 30 cents a swipe most times, right?
Yeah.
With Bitcoin, free open monetary network, maybe it's a penny. What does that extra revenue do when it gets back into the hands of those business owners? Can you raise salaries? Can you pay your people more? Can you offer more benefits?
Is it practical? I've always viewed Bitcoin kind of like gold, where it's like you're not going to buy a sandwich in gold, right? Like it's kind of just like a store of value.
You can think of it as Bitcoin as money, Bitcoin as the network, and you can use the rails. So there's a way that you can absolutely, and this is something that our firm is looking into, and we may do. Like I don't necessarily want people spending their Bitcoin to pay advisory fees, right? But they could take their dollars, use an app called Strike. You load it with dollars. You scan a Lightning invoice, which Lightning would be layer 2. Lightning is the payment layer of Bitcoin that allows payments to be instant and settle and work. Again, it's probably going to be way too much to get in the weeds of like how's Lightning structured, how's it different than layer 1. But what it does allow,
you don't want to spend another 3 hours talking about it?
No, my wife will probably be like, hey, yeah, we got to move along with our evening. But the idea of Lightning being able to like, hey, how do I pay for my coffee? You can do it with Lightning. And so what Lightning could do is you could set up your office and you have a transaction and you type it in and you say, hey, do you want to, pay with, Strike or Bitcoin or whatever, and we'll get 2% off your bill. You still net and pocket the extra. They get a discount. They're happy. And then every time they come in, now they're going to start paying that way. And eventually that's just the default way that they pay. That is still coming. Like that's got a little ways to go, but there are businesses and ways to set that up that you can save a significant amount of money where, hell, like 30, 40, 50K in processing fees that practices are paying. Like that's real. That's another person. That's another body in a lot of these places. And I think that is something that needs to be explored and looked at. And I think if you put it out there and you incentivize people to pay in a different way, I think they'll start to adopt it. And then what happens when they start to adopt it and see this and say, well, why is my barber, why is my veterinarian, why is my dentist like asking me to pay in this? Maybe I should check this out. And that's how it happens, gradually, then suddenly, and then people start to figure out like, maybe I should spend time understanding this. So I know that is definitely painting a rosy picture of what could happen, but it's really interesting. And I think incentives, as we have kind of touched on a couple different times, drive a lot of things. And so if the incentive structure is aligned, I think you'll see more adoption. So something to consider.
Yeah. Okay. Well, all right. Where do we go from here? What are you advising your clients? What kind of allocation? I know it's different for everybody, but let's say, how would you split, stocks and mutual funds and crypto and bonds for somebody in their 20s versus somebody in their 30s versus somebody in their 40s versus somebody in their 50s versus somebody in their 60s?
Yeah. I think I'm of the opinion that regardless of your age, I think that Bitcoin and even a small increment can be beneficial and help from a diversification standpoint and managing risk. And you hear Bitcoin, you hear
small, 2%, 10%.
Yeah. So I would say, hey, if I'm 65, maybe it's 1 or 2%. If I'm 20, maybe it's going to be something more like 10% or maybe up to 20. Again, would really depend on a lot of different things. I think it's really hard to just say, hey, this is the recommendation of what you should do. But yeah, from the standpoint of understanding the goal here is to protect purchasing power and grow your earnings so that your real return is there so you can continue to live the lifestyle that you want. Ultimately, that's going to dictate, the mixture of stocks, bonds, maybe other alternatives, real estate, farmland, other things that are out there that you can kind of dip into that are going to be diversifying. I'm not saying, hey, everyone 100% go into Bitcoin. I'm not saying that they need to have the same conviction that I do. I think it takes a lot of time to build that, but I think a small allocation makes sense for a variety of reasons. But I think going back to one of the questions you ask on, like if I'm 20, 30, 40, I don't want to own bonds. I really don't. I think it's really going to be you're going to be hard pressed to buy and hold bonds and have any sort of actual positive real return after inflation. It's just going to be really tough, really, really tough.
I was always 100% anti-bonds, period. But then I realized, okay, well, it depends on your time frame because the S&P 500, the market has never lost over a 20-year time frame. Even during the Great Depression, it took about 20 years to recover. And that was such an extreme scenario. But aside from that, you've always significantly outperformed the rate of a bond return over a 20-year period. And so it's the younger you are, the less sense bonds make. But I do kind of see an argument for it once you're in your 60s and you're going to completely start working. It's okay, I get why you want part of your portfolio to never go down and to always give you a safe return, even if it's only 2%. But yeah, it's if the younger you are, for me, it just doesn't make any sense.
So crazy stat though. So if you go back 25 years, so interest rates kind of peaked in the late 70s, early 80s, right? So owning bonds, if you own bonds and interest rates fall, that's a positive. That's good. Rates go up, bond price goes down. That's bad. So long duration U.S. Treasury bonds, 30-year Treasury bonds that you bought and held, outperform the S&P 500. Total return.
Oh, really?
Yeah, it's wild. But that cannot happen going forward because it's all about where's the starting interest rate. When your starting interest rate now is going to be...
What was the interest rate at that time frame?
Oh, it would have been high teens.
Okay, all right. So I guess I've only really known bonds recently where they've been, 5,
so
6%.
It's all about where's your starting point. Yeah, bond math is, yeah.
It's a good distinction. Yeah. Okay.
So my thing is not that bonds have been bad. It's that bonds going forward are going to struggle because where we're starting at is super low interest rates. And so that buffer, that extra bit that it's going to give you is not a lot. So yeah, I think what you want to do is the juice is worth the squeeze to learn about Bitcoin. That's ultimately, if someone's still listening at this point with us going back and forth and rambling, learn about it, dig into it. I will give you 2 really good recommendations as far as where you can learn more. Read the Bitcoin Standard by Saifedean Ammous. And listen to the Bitcoin Fundamentals podcast by Preston Pish. I think those 2 will really help you grasp. And I've shared that with a ton of different people.
What was the second one? I got the Bitcoin Standard.
It's called Bitcoin Fundamentals from Preston Pish. So he originally started out as a value investor. The We Study Billionaires podcast. Really, really sharp guy. And then he really got into Bitcoin and has completely transitioned only to Bitcoin. They still have their other podcasts, but he only hosts the Bitcoin Fundamentals. I think a new episode comes out every Wednesday. But those are 2 really good resources for folks.
Fantastic. I'll write those down in the show notes. Okay. And then, for anybody listening, they want to get in touch and reach out, learn more about what you do. What's a good resource for that?
So they want to go to vincerewealth.com. That's a great place to reach out. we didn't really talk about planning. We talked really a lot of other things. I think that's kind of the first and foremost is kind of tying the personal and professional together, working with people. I will tell you, similar to this conversation, like we're not going to hold well, you have to allocate your 60-40 portfolio and just buy it. Like we want to take a different approach. We want to be intelligent about what's the best use of the next dollar that you earn and reinvest in your business.
Investing back in the business, right?
And that to me is the biggest thing is like, if you have a great business, lean into that. So, yep. Just VincereWealth.com.
Help them decide whether to buy real estate versus lease real estate. Like, is it a full financial picture?
Yeah. So if it has a dollar sign attached to it, we want to talk about it. And, we're not going to do your taxes. We have great relationships that will do that, but we'll talk about tax stuff. We want to do tax planning. I always will encourage people, if they want to invest in commercial real estate, the first place should probably be thinking about what's the building that they currently own. I know some people might not always agree with that. We can certainly extend a conversation and chat on that, but it's one of those things where it makes a lot of sense because you kind of know the tenant and they probably will pay their bills. So,
yeah. We can, and our answer to that, should I buy or lease my real estate, is it just depends, and we can go in takes a couple minutes, or wow, you got to really get a financial picture of where they're at.
Totally, and that's the thing with financial opinion and advice. Anyways, at the heart of it, it's always going to be, well, it depends on X, Y, Z in your situation, and it's hard to give rules of thumb and hey, the default answer is this, but it's fun to ask the question still, and I can appreciate that.
All right, man. Well, hey, listen, thanks so much for your time. I hope this was insightful. Yeah, like you said, if anybody's still listening, and you don't own Bitcoin, and you made it this far, you should probably go buy Bitcoin. But I will keep your information in the show notes, www.vincerewealth.com, and look forward to connecting in the future.
I appreciate it. Thanks for having me on.